Hey, what's up everybody? It's Omar from the Bullish Bears team. I wanted to make a video about like these scanners that I run and sort of like entry points, on stocks like how do you look for your entry and your exit and whether you're going sort of long or short. One of the things in my again, if you haven't seen any of my videos, um, I'm part of this community, Bullish Bears, located on Facebook. Just type Bullish Bears in the search, and it's a private group. You put a request, they'll accept your request. I have a bunch of videos on. I have a bunch of videos on YouTube. So if I go to YouTube. um, you can watch all my previous videos on YouTube. So if I type Bullish Bears, and you can see on the stock market community here, this is the Bullish Bears community. You can go to the playlist and you can change this to list, and you get tons of videos that these guys, put together. We all belong to another group, and we kind of like they came together and formed this other group, and I just joined like everyone else, and they're great. I mean, they put tons of free content. That's one of the founders of. He's actually the founder of the group. They have all types of trading, options trading, patterns trading. They teach you all kinds of things. Now, the videos that I put on the group are in this section of Omar's momentum trading, and I have a video on how to create a watch list using Thinkorswim, momentum trading for beginners, the Thinkorswim custom scan setup for momentum trading. I have like a total of like I think 8 videos now. You just need to like I just created one today for my watch list for tomorrow. They'll upload it here, and that's where you can find me now. I wanted to put a video together talking about like these scanners and entries and all that stuff, just to kind of remind everyone how this works. Basically, if you want to build a scanner out using Thinkorswim, you go to this scan section, and within the scan section, you have this little section all the way here to the right, where you can kind of create your scan. So you see it says create scan query, and you can just create this query basically based on whatever you want. These are the primary scanners I use. I'm always messing around and doing different ones, but my big ones, the ones I find most of my plays on at the open is the nightly scan and the two gap candle scan. And the way you build these out, because people have asked me how I build these out, it's very simple. When you go here, you just click on this, okay? You click on where it says load scan, and let's say I want to create scan query, right? So I click that. It's gonna open up this new screen. So I'm gonna call this test, and just so I can differentiate this from everything else, I'm gonna put test nightly scan. Right? When I build my nightly scan, it's always you're gonna get this. You have different filters that you can add. What I usually do is I'll go last, meaning the last price, and then this is my range. So what price range I want to look for? Maybe all you care is to look for stocks between $5 and under, or between $1 and $100. Whatever your range is. I usually do 20 cents. So I usually do between 20 cents and $30. That's the range. So now it's set, okay, for last. That's my range. This is so the system is gonna actually search for stocks between 20 cents and $30 at any given moment. Volume, right? I want something that's sort of liquid. So I like a minimum volume of 500,000 shares. No max, okay? So and then I want stocks that are at least up 5%. So I just put 5% and no max, right? So this is the name, okay? This is my criteria, and I hit save, okay? So now I got this new scan, all right? And if I want to run it, I just click scan, all right? And it pulls up all the stocks that should be on my watch list, all right? So his last, his volume. Oh, I'm sorry, I gotta pull it. Oops, sorry about that. let's go. So now I'm sorry, to pull that scan up, I go to, did I save it? I don't think I saved it. Did I save it? Yeah, I did save it. I'm sorry. So what you do is you go to personal and you go down to whatever you named it. So I named it test nightly scan. So now it's loaded. And when I hit scan, here it shows up my 50 stocks, okay, that were in play, all right, for the previous day. Now, if I want to have this scan to appear over here on this side, all I need to do is I just click on this drop down here. I go to personal and I look for my scan. So it's right here, test nightly scan. So now it's there, okay? And then when I go to charts, this is where I would find my charts. Now, I use two charts here, and I use the 1 minute and 5 minute time frames. The way you kind of decide how many windows you want is you come here to the left and you click this. And let's say if I wanted, 8 windows, I click this. Now the reason why I only see 2 is because I made sure that my scan, I have a link. So whatever color you choose and whatever color you pick here in the link, it's gonna link. So if I click GBT right now, those 2 stocks would show GBT. If I added, a third one, all 3 would show. All right, that's how that works. All right, that's how I get the multiple windows. So I only care about 2 windows. Right now, this is my criteria. All right, so I click this edit scans. Okay, if you want to build your own criteria, you click that little beaker, and in here this is where you can kind of build out your actual thing. So let's say I'm gonna just delete it and build it all out from scratch just to show you. So I'm gonna go to studies, and I'm gonna go to I'm gonna delete my day trade study. Okay, and now I'll go and I'm gonna go in and oops, sorry guys. I'm gonna go to studies and I'm gonna go to remove all studies. And I'm gonna say yes. All right. And I'm going to do the same thing for here. Remove all studies. Yes. Okay. And I'm going to clear the drawing as well. Let's do go in and do remove all drawings. All right. So now I don't have, everything is just clean, right? Nothing here. So now I'll show you how I build out my study, the primary study that I use. So step 1, you go and you click the beaker. Step 2, you find what you want. So I like to use the exponential moving average, is the 9 and 20. All right. So I just type EXP, and you see it says moving average exponential. I select it, hit add selected, and by default it has the 9 here. Okay. I'm gonna double click on it. Has the 9, and now I gotta decide what color I want it to be. So you pick whatever color you want the 9 to reflect. Okay. I'm gonna say for the 9, I'll pick white. Okay, so I have white here. You can change the style and all that stuff. You can make it bigger, like the width. You can make it wider or thinner or whatever you want, right? So I leave it that way, right? I'm gonna hit OK. So now my 9 is right. I'm gonna add it one more time because I want to add the 20 as well. I found this out using the 9 and 20 because I follow some other traders like Ross from Warrior Trading. He uses the 9 and 20. If you watch Cameron Fusi uses the 13 EMA. It's like an in between the 9 and the 20. It really depends, but I see most traders use the 9 and 20, so I just mimicked it. That's really my rationale for using the 9 and 20. So I go here, I type 20, right, to make it 20, and then I decide, all right, I gotta make it out a different color than the white. So I'll go to more, and I'll decide what color I want to use. So let's say on the 20, I want to use, I don't know, I'll use the light blue. There we go. All right. So I got the 20. I'm going to keep that there. It's fine. Next up, very important, probably indicator there, one of the most important, or the most important to most traders is the VWAP. So I click VWAP, and I go in now. To make this look nice and clean, you want to pick a color. I pick green. I don't know. I like VWAP green. So it's my preference. You can make it whatever color you want. Then you're going to go into the upper band, and you're going to remove these show. You're going to click off on show plot, show bubble, show time. You're going to do that for the lower as well. You don't want it to show. You just want to show that one line. You don't want to see an upper and lower band. Maybe you do, but most people don't. You leave everything else the same. All right, hit OK. So now we have the 9, the 20, and VWAP. Those are the upper, those are the actual indicators that I like to use on the upper. On the lower, I like to use the RSI. So put RSI, okay, and add selected, all right. And then, you could kind of figure out how you want it to look. So overbought, oversold. So when it's overbought, it's red. When it's oversold, I'm gonna change this to green, because to me green means when it's oversold, it's like at a value and it may be a potential buy. So that's how I get those colors. All right, and you can kind of change this if you want. I'll leave this as is. So that's the RSI. Okay, oversold. Let's change that to red. Let's see, yeah, red. And overbought, let's change this to green. So I'm going to pick green, okay, and I'm going to click OK. All right, so we have the 9, we have the 20, we have VWAP, right? Remember, I did VWAP, green, remove the upper band, remove the lower band, right? RSI, just to revert RSI, overbought, we chose red. Actually, I want to make that a more red. Let's put the red or red, yeah, just for me, just picky like that. And then green for oversold. All right, so overbought should be red. Yeah, let's change that. I mixed them up. Sorry about that, guys. Overbought should be red, and oversold. Overbought should be red, and oversold should be green. There we go. Beautiful. All right. Couple of other super important. The MACD. Very, very important. All right, MACD right below here. I'm gonna go here, and the MACD, I'm gonna put value. I'm gonna change this to green, and the average, I'm gonna change this to red. And I may modify this, but for right now, I'm gonna leave that as red. All right, the differential, the zero line, I'll leave as is. No big deal. Okay, and I'm not gonna change any of these errors. I'm just gonna leave it like that. I'm gonna click OK. All right, the RSI. Okay, and the MACD are the two most important ones. There's another one that I've added. This thing. Okay, and sometimes I use it, sometimes I don't. I'm not gonna modify anything. I'm just gonna leave it as is. So once I have all my indicators, I'm gonna have to name it. So save set as, and I'm gonna call this. Daily trading. Alright, indicator. Alright, and I'm gonna hit save. And I'm gonna hit OK. And there we go. Now I have my new indicators, right? This is the 9, this is the 20. Okay, this is VWAP. Down here below, I got the RSI. So this is it. So when it's up hot, it's red. When it's below the 30, it's green. All right, that means it's been overbought. Okay, and that means it's gonna pull back. Down here below here, it's oversold, and that means that maybe a potential buy. Okay, here's the MACD line. So yeah, when the green line's above the red, that's bullish. When the green line's crossing over the red, that's bearish. All right, so yeah, the lines look good. The TTM squeeze. All right, so they look good now. That's the 1 minute. On the 5 minute, you can pull the same thing up too. So all I gotta do is go to studies, and I'm just gonna go to load study, and I'm gonna put Omar day trading indicators. All right, and there you go. Now I have my actual indicators, right, on the 1 and on the 5 minute chart. Okay, so that's how I build. Those are the indicators that I use. All right. Okay, and I always generally use the 1 and 5 minute time frame. All right, if I'm trading midday, which is very, very rare, seldom, I'll use the 1, and instead of the 5, maybe the 3. All right, maybe the 3, or even the 3 and the 5. The reason why is you want to expand your time frame middays, because the stock range moves a lot slower, so it's easier to get. So the longer the range, like the time frame, it's like you get a cleaner look. It's easier to get a better sense of how the stock the candles look when you got like a 3 and a 5 minute range as opposed to a 1 minute range. At the open, you want the 1 minute range because the stocks are real volatile. But you know, if you're trading like between like 11:30 or like between 11:30 and like 2, where it's kind of slow, people out to lunch, whatever. You know, you're not. The stock sometimes can move slow, so you really don't on a 1 minute chart. Sometimes if it's not there's not a lot of volume, you're not gonna get a clear indicator of what they do. I don't recommend trading at that time. The best time to trade, honestly, guys, is between 9:30 and 11:30, and then between 2 and 4. You know, all you really need, honestly, is to trade the first 2 hours of the market. You know, and you shouldn't be making a lot of trades. One trade's enough. You know. And if you're under the PDT rule, meaning you don't have $25,000 in your account, you're not going to be able to make more than 3 day trades every 5 business days. So, you know, it's something to also keep in mind. Now, with that said, I hope this gives you some clarity. Now, you may say, well, Omar, I don't know what the hell does the 9 EMA and the third and this 20 EMA and VWAP mean and the RSI. You know what? Do your homework. Do your homework, guys. When I used to watch the videos on YouTube, when I would watch Tim Sykes, well, Tim Sykes never talks about indicators, which, you know, that's a whole nother topic. But Warrior Trading and Cameron Foost and Bulls on Wall Street and a lot of these other guys, Nate from Investors Live and all these guys, you know, they talk about the indicators and they would mention these, and I didn't know what any of this stuff means. So you know what I would do? If I didn't know what VWAP meant, I would type VWAP, and I would go to the internet. And I would go to Investopedia or whatever, Chart School or whatever, and I would go there and read it. And then I would come here and I would read what the hell does it mean? VWAP explained, all right? Why use VWAP? And, you know, moving averages and all this stuff. So, you know, you got to study this stuff. And then you could take it a step further. You know what? Go to YouTube. And just go to YouTube and type, what is VWAP? Or just sit there and type using VWAP. And then you search, how to trade using VWAP. There you go. Here's a video. You know, so guys, you gotta do your homework, man. You gotta stop being lazy, man. Some of you guys be asking me some crazy questions, like I don't even understand. Like, why wouldn't you take the time to look it up and learn it? You know, so with that being said, let's talk about entries and exits and that sort of stuff. And I'll try to help you the best way I can. Okay. Also, guys, just so you know, this is, you know, sometimes you see my screen black, sometimes you see white. It's really, if I'm bored or whatever, you can change the color by coming into this little cog and you can kind of mess with this stuff. You go to appearance and here where it says background, you can sort of like, you know, change the color. So if I wanted to make this white, I could click white, hit apply, and now this is white. All right. If I don't like that, I could go back and go to, you know, put it back the way it was. So I go here. And I go back and I hit apply and now it's back the way it was. All right. Also, you can go to this. You won't be able to see it because I think I set up, but there is a setup button all the way on the top, right above Investor Tools. You're gonna see a setup button, and you're gonna see something that's gonna say application settings. And in there, this is where you can kind of do some more modifications. One of the things you can do here, which you can go to display, and I'm sorry, look and feel. And look and feel, you can pick other options. So you can do this light option. And you can hit apply settings and the whole thing changes white. All right. So if you like white and you find this more appealing, you know, then you can have white. All right. And you can use this, you know, maybe you find white more appealing than the dark color. It's just really, and you know, it just really depends on your personal preference. All right. All right. I'm going to go back though, and I'm going to go back to application settings. I'm going to go back to look and feel, and I'm going to pick dark. You're going to do old school Thinkorswim, which is kind of cool. So I'm going to apply settings, and now I'm back. All right, so let's talk about a couple of stocks. I'm just going to talk about a few. All right, I'm not going to go crazy with this. So one of the stocks that I want to talk about that I think is a good teaching point. Let me see if I can find it, which was... oh, you know what, guys? I'm sorry. Let me show you how to create two other scans that people have been asking me about. I'm totally sorry about that. Let me go back to scans before I do this. There's two other scans that I like to use at the market. Well, a few others, but two that I think are really helpful. One of the others that I like to do is like a price direction scan, and let me show you what that means. So I'm gonna go to load. I'm gonna go create new scan query, and I'm gonna call this price direction. I'm calling it test price direction up. Price direction up. Okay. And what you do is, again, you got to figure out, all right, what's the price range that you want to search, right? So you can have multiple price ranges. All right. What I do is I go to last. Okay. And again, I'll do the 0.20, and I'll do $30. You can make this as much or as little as you want, right? And volume, okay. Now at the market open, if you want to catch things a little quicker, you can use a smaller range, like you can use 400,000 shares or 300,000. It's really up to you. Me, I'm gonna keep it. All right, no max. And then the change, if you want, you can put change. Really, I don't really focus on change. What I do is this is where you want to modify this. So you would get rid of this right here, and to add one, you would go to where it says add study filter, and then from here you got all these options. The most powerful one to me is the price performance. So you go down to where it says price direction. All right, and then you can say the price direction is the close has increased over the last 2 consecutive bars on the 1 minute. Okay. All right, 1 minute candle. All right, and then you hit save. Okay. What that does is that's gonna show you all the stocks, especially this is why this is really powerful at the open, when the candle has closed green on the last 2 minutes. So that has a minimum of 500,000 shares. All right, which is great because maybe you have a watch list. Your watch list is a dud, and you're looking for stocks, but you don't see any. I think this refreshes every minute. So what you do is, if you want to pull it up, you go to personal, and here it is, test price action going up. And then what you do is you have your charts open, and you're clicking. And what I like to do is this is a strength meter, where I like to look for the strength meter for stocks that are green. Right now, the market is closed, but if you see them green like this, you click them. So I'm filtering really quickly through this, and I'm clicking on, and then what I'm doing is I'm looking for stocks go up. So like, for example, this stock would have appeared on my scanner as soon as it closed. As soon as this closed, because this one went green, this one went green. All right. As soon as this closed, right away, any stock that closed on the last 2 minutes green with consecutive 1 minute chart, they went up. Right, they would automatically appear, and then you can kind of take a look, and you can catch something that's popping. That's why I like that price direction up. And then you can do the opposite. Let's say you want to see stocks that are actually collapsing at the open, because you may want to either short or dip buy it. All right, you could do the same thing. So you go back to scan, okay, and then you click on this thing. You go to load. You go to create scan query. And you're going to call it test price direction downward. Okay, same thing. So I'm going to go to last. Okay, I'm going to go to last. And, same price. Oh, sorry about that, guys. See, 20 cents and $30. And volume, I'll put 500,000 shares. No max, and then I'm going to get rid of this, so I'm going to X that here, and then I'm going to go to add study filter, and I'm going to go back down, and I'm going to go to price performance, and I'm going to go to price direction, and I'm going to do the close has, instead of increase, decreased over the last 2 bars on the 1 minute chart. Okay, and then I'm going to hit save there. So what happens is, and if I wanted to pull that up, I go here and I go here, and here I go to test price direction, test price direction downward, right? And then it'll show me the stocks that are gapping downward, right? Like these. So like what I do is I click this quickly, and I'm looking for stocks that are solely like this at the open. So then I'm having my chart open, and this is a perfect example. This is a stock that would have popped on my candle. I'm sorry, on my scanner as soon as you had right here would have popped because you had two consecutive red candles on the downward spiral, and you could have caught this, and you might have shorted this because this is below the exponential moving averages. All right, which is a great short sign. And if you look here, look how it's the red is over the green, which is a great indicator that it's selling off. And obviously you're gonna watch level 2, and you're gonna watch, you should have level 2 so you can see that. And normally what you're gonna see is more sellers than buyers. Okay, that's driving the price down. So you're just getting a lot of selling pressure, and it's just driving the price down. So you have it, and you have that scanner in both directions. All right, and the way you add those scanners here is you just click this plus button, and then you go to watch list, and then you would just add your watch list. So you would come here to default, and you would look for it. Let's say I'm looking for price direction up. There you go. So price direction up, price direction down. This is my watch list. This is my nightly scan, and you're just going through stocks, and trying to get a sense of what the stocks are gonna do. All right, and those are the scanners, the primary scanners that I use. All right, you can there's a million scanners, and on YouTube, you go to YouTube and just literally type, think or swim scanners, and I mean, scanning for breakout stocks. I mean, just random people post all kinds of stuff here. All right, I mean, they probably people that got way better ones than mine, but these work for me. All right, look, people got all kinds of stuff. Everything you want, guys, is on the internet. I mean, literally, everything you want is there. All right? People got all kinds. Look at this. It just goes for pages and pages and pages. All right? So, use the tools that you have, man. For all you youngsters, man, you live in this is like the greatest time in history, man. You can learn pretty much anything about anything for free. All right? On the internet. Even if you can't afford a computer or can't afford internet service, you could go to the library and get on the internet for free. You know what I mean? So there's no excuse. Put in the work. So with that said, let's go through a couple of stocks. Let's just talk about a couple of I want to talk about a couple of entry points and what do you look for in an entry point. And I want to talk about Zan, because Zan is really like this. So right now the market is ridiculous, right? It's way overbought, right? Okay, I mean, we're due for a price correction, and every day you got all these plays and stocks that are just running forever. That's not really typical of the market. What's more typical of the market, and you're gonna see when it pulls back, is instead of having like 100 plays, you're gonna have like maybe 10, and they're gonna happen like within that first 30-minute window, and then then you're pretty much gonna be like flat for the day, and this play is typical. What happens is Zan on Friday, look what it did. It popped right at the open, right? And here's the 1-minute chart. And I'm going to put up the 5-minute chart to give you a sense of how this works. All right? Now, if I saw this on the 1-minute chart, right, and for whatever reason, let's say it's on my watch list and I'm watching it, right? I'm seeing it here, right? You got VWAP here. You got the 9 and 20 EMA, right? You got the RSI. It's below 70, which is great. That means it's not overbought yet. Now, one of the things that would intrigue me immediately is this MACD line, and to me, this is like the best indicator of all the indicators, in my opinion. When you see the green line, and the reason why it's like this is because I configured it like this, right? Remember, we went into the study and we went into MACD and we changed it, so we made the value green and we made the average red, and that's why you see it as such. That's why you see it as such here. Otherwise, it would be a different color, right? But when that green line is above the red line and the more spacing there is between it, that's a very, very bullish sign. That means that's an indicator that that stock is going to go up in price quickly. Also, this TTM squeeze, when you see it light blue like this, that means that's another confirmation that the stock price is going to go up quickly. There's no guarantees in any of this, guys. If anybody tells you that, they're full of fucking shit. I'm telling you right now. Nobody really knows. Not even these indicators guarantee you success. They just help confirm a direction. What matters most is the patterns, all right? more than anything else, okay? So let's say I'm watching this, right? And I see it go up. Now, what you should be doing is when you see a stock starting to trend in a direction, you should put a trend line. So what you do is you run a trend line, and you gotta let it like kind of like go wherever the candle direction is going, like this, all right? So as you can see right here, the candle direction's up, right? And I'm looking at the 1 minute chart. This is the 5 minute chart. Let me minimize this a little bit. That's weird that it shows up there like that. Oh, because this is that first 5 minute candle. This is all. That's why it looks like that. So now, okay, it's going up, right? And you see a trend, a change in direction. Because what happens is people started buying the stock here. It went from 222 to 239 in a matter of 244 in a matter of 3 minutes, right? You're like, shit, I don't know what this is gonna do, right? Now you should be watching, you should have your time and sales tape here so you can see all the sales prints going, right? And then you should have your level 2 where you can see how many buyers, right, are placing bids on and how many sellers are trying to sell on the ask, right? If you got more buyers than sellers, that's generally a good indicator that the stock price is gonna go up. If you have more sellers than buyers, that's an indicator that the price of that stock will more than likely may go down. Okay, especially when you got sellers that are trying to sell a lot of shares or buyers when are trying to buy a lot of shares. That also helps. Like if you have a bidder that's trying to buy 30,000 shares, all right, at 258, then that's a big request, a big purchase. That should drive the price of the stock up. If I see a seller on the ask, trying to sell 30,000 shares, all right, that may push the price of the stock down, okay? So those all help you. But the best indicators are the flags. Are the patterns. So what happens is, usually when you get a stock that spikes, you're gonna get usually two rips, which will include 2 pullbacks and then a sell-off. And what happens is here, right? If I'm watching this, and let's say I caught here, I'm waiting for that pullback to at least the 9 EMA. It pulled back, and you see how I hit the 9 EMA? The next candle that goes up above it, that would have been my entry point, and I would have bought right in here, okay? On the 5-minute chart, let's say I'm not comfortable on the 1-minute chart. I'm looking at the 5-minute chart. My first entry point would have been the first candle to make a new high over the previous candle. So right here would have been my entry point. Okay, right when this broke the high of the 5-minute candle. So right here would have been my first entry point, okay? And my stop loss would have been the low of this candle, all right? So some people do percentages, some people do price, some people do money. Like say, hey, if I'm down 100, I'm just selling. Or if I'm down 5% of my entry, I'm selling. It just really depends on what your threshold is, all right? But let's assume, right? So that would have been my first entry point on the 1-minute here, on the 5-minute here, okay? Now, let's assume I'm watching this and I see it, right? And let's say I catch it here, okay? Right here, this is called, you see you have the pull up and you have the flag here. This is called a flat top breakout, where the stock kind of goes flat across and then it just breaks out. Now here, at this point, this is higher day, all right? And you see the flat top? My entry would have been, if I'm watching this, once it breaks the high of this, because at this point, this is the higher day, all right? On the 5-minute candle, as soon as it broke above this, like right here, that's my second entry. So I would have entered right in here, all right? Right at the higher day at this point, this candle is at 253. At 254, that would have been my entry, okay? And my out probably would have been the low of this candle, which is 243, all right? Now, that could be a lot of little. That's 10 cents. Now, 10 cents cannot mean much. If you have 100 shares, if you have 1,000 shares, 10 cents could be $100. If you have 10,000 shares, that could be $1,000. So it's all relative to how many shares you're purchasing. Okay, that would have been my entry. Now, because you had the first pullback here, you had the second pullback here, I would have got in very quickly to get in and out because I'm watching the MACD, right? I'm watching the MACD. It still looks very bullish, right? You got the TTM squeeze. It's light blue, which is a very bullish sign. But the RSI is over 70, which means that it's been overbought. So this is due for a pullback, all right? So at this point, I'm watching this, and honestly, I would have sold somewhere, this is kind of just running, and I would have just pulled another. You see how it's not riding the 9 EMA. It's kind of like out in front of it. At this point, if I would have executed my entry, I would have put a trend line here just to see that as long as it goes, it's above the trend line, then you're good. But once it breaks it, you know that more than likely there's going to be a change in price direction. And what happens is remember, whole numbers are psychological resistance barriers. So $2, $2.50, $3, $3.50, $4. People tend to sell or at whole numbers. So before $3, I would have sold. I'm looking to make 10, 20 cents. I'm not greedy, you know? And what happens is once it breaks the direction, look what's happening. The curl is beginning to take place here on the MACD. That is a sign that it's time to get out. Once I see this starting to curl, and you're getting right to that $3 mark, I'm probably selling my shares. All right, and then basically look what happens. So let me just zoom out. Okay, look what happens. It breaks direction and it sells off. All right, short sellers like me, I like to short. So me personally, like what I'm doing more is less buying, and I like to watch this and put my trend line and watch the trend break so that I can short it into the reversal. The problem with shorting, all right, and do your homework if you don't know what shorting is that you need to, your broker has to have shares available for you to borrow in order to short. And when you're looking at stocks under $5, it's very hard to find shares if you're using E-Trade, if you're using Thinkorswim. You need one of the bigger brokers like Speed Trader or Centerpoint. You need like 30,000 and more to open accounts with those brokers. So they're harder to find shares to short. But this is very typical. What you see here, this actual chart is very consistent with what day traders see. This is more typical, especially when the market pulls back. You're gonna have more of these type of runs where they're gonna be quick pops and then sell-offs. And you see, it just sort of sold off and then consolidated. Found this new support at like around 250. All right, but that is basically what I look for. I look for pullbacks. When you get the pullback, that is where you enter the stock. So when you got that first pullback here, that would have been your entry. Your second pullback here, you see how it's out in front, but when it pulls back in, this is your entry. So this candle would have been right here. This could have been your entry, or once it broke the high of day right here. So once it broke the high of day, that could have been your entry. But remember, if you're looking at a stock and it's in the 250s, you kind of want to sell before $3 or right at $3 if it's running, because you're looking at the MACD. As soon as you see that curl, you know that it's probably going to sell off, and you see it just sold off. On the 5-minute, remember, you're looking for the new candle to break out at a new high over the previous candle. So here would have been your entry, here would have been your entry, here would have been your entry. All right, and you kind of watch it. All right, and when you see that wall of sellers come in, you want to get out. Okay, you want to get out. And Thinkorswim got these really cool features. You got the big buttons here where you can buy, you can kind of get your fills in, or you can kind of mess around with this and go to active trader, and you can use that as well, and it helps you get in and out of positions quicker. Okay, so all right, so that is the most typical type of play that you're going to see as a momentum trader when you try to get in and out. And look, and all this happened all between 9:30 and 9:50. You're out. All right. On our this would have popped up, and I don't know how many shares. Let's see, the volume is 77. This probably would have popped up on my scanner on the nightly, the big nightly scanner, probably somewhere in here. But it would have popped, because it doesn't have a lot of volume. All right. So it might have popped up a little late, might not have been there. But if you're watching it, that's how this works, all right? And let me see a couple of other stocks. Yeah, this is a stock that kind of gapped off. Now let's talk about this. This is another a strategy that a lot of people do. Remember, I just showed you guys how to do that price direction downwards, price direction downwards, where the criteria is, again, let's just pull it up so we can say, just to remind everybody, let's go price test, price direction downward, right? I spelled it wrong. All right, the criteria is, remember, 20 cents and $30, 500,000 shares, the close has decreased over the last two consecutive bars on the 1 minute candle. The reason why I wanted to talk about that is because what you're gonna look for, there's two things you can do. Let's say the market opens, right? And you have your price direction downwards and OWCP pops up. And you hit, these are the two consecutive candles, right? So it might have popped up after here, depending on how much volume is happened already. So let's say you know it's a low price stock. You gotta you don't have one of the big boy brokers, so you're not gonna be able to find shares to short. So you're like, well, this is sort of useless. It's not. What you like to do is sometimes I'll watch a stock sell off, because what happens is you gotta have what's called, either the technical term is a gap fill or a dip buy. All right, where you watch the stock sort of sell off and you wait to see it kind of find its support, and look at 151 it found its support. Now look, the red candle is above the green candle, which tells you this is a very bearish sign. So that's a very strong indicator that the stock is going to continue to sell off. The TTM is red, so that's a lot of selling pressure, right? You got the RSI getting low, but look, it's getting to that oversold territory, right? And you're going to see that right here it finds its support, and then it just reverses. And this is what people do. They look for stocks and they try to wait to see a stock find its support, and you put your little trend line there, and then what they do is they buy, dip buy. So they buy on the reversal. Sometimes this was a strong reversal. It went from 150 all the way back up to 180. Now that doesn't always happen. Sometimes sometimes it'll sometimes it'll go up 5 cents, 10 cents, and then continue to sell off. Sometimes it goes back up more than what it sold off for. Sometimes it just rips up. But that's another opportunity that you can look at the open. If you don't see any plays on the long side, you can find a play like this, a dip buy, where and this would have been my entry, as close to support as possible. So let's say if I would have found it here at 160, and I missed this and I caught it here, I might have bought it only because I see that the MACD's crossing over. You see that super bullish confirmation, right? The lines, the more separated they are, the stronger the indicator that is. And you see how this is green? This is the light blue, which is a very bullish sign. I might have bought, and look, and you don't see, it's hard to tell here on the 1 minute, but look, this is a bull flag pattern. See, right here, this would have been an entry, confirmation to get in. Another flag, confirmation to get in. Another flag, confirmation to get in. All right, those are your three entries, but you got to be careful, because you know what happens again? It sells off, right? But then it runs, but guess what? It has another pullback. So remember, you usually get two pullbacks and then a sell-off. You got three pullbacks, and then look what happened. It hit the high of 180, and then it kind of consolidated, and it touched VWAP. VWAP became support. And then it bounced off VWAP, and then it continued on upward trend all the way back up. So, these are like the type of plays that you look for in the open, and then it just continued to run all day. And you see it kind of stood, it never broke below the 20 EMA. So you had the 9 and 20, and you see for a second there, it kind of broke below it, but for the most part, it's there. And you see how it's kind of choppy here? That's why, like, when you have these type of issues, the 5 minute is a little bit cleaner to kind of get a sense of the direction of the stock. And that's what I'm talking about. When a stock doesn't have a lot of volume, the 1 minute chart sometimes may not be that favorable. Sometimes you just want to simply look at the 5 minute chart, because it looks a little cleaner. With 5 minute time frames, you get a better sense of the price direction. Now if I was watching, let's say if I was watching this all day, all right, if you missed all this, my entry would have been higher day. So right here, and this is what about 2:30. If I say, okay, this is high day at 2:30. If it breaks above this, I'm in. So I would have been watching this, and you could put an alert here, like you can literally right click and create an alert, so that the system will alert you at that mark. Okay, it'll actually mark you. So you see, mark is at or above 205. Okay, and you can say, buy if breaks high of day. Okay, and then you can hit create, and then it alerts you, which is very cool. So you can create that. So let's say you missed all this, and you see, oh, this is the high of day. If it breaks above it, that's a confirmation. And look, once it broke that high of day, you got some buying pressure there. All right, and it kind of just ripped the rest of the day. All right, that's what a lot of people do. They look for that higher day breakout to trade into. Okay, that's another confirmation to buy into. All right, and then if you want to delete it, just right click it and you just hit cancel, and it's gone. All right, if you want to remove your thing, you can just your drawings, you can just hit remove drawing, highlight and hit remove. All right, let's see if there's a couple of others. All right, stocks like this I do not look at. All right, too choppy. All right, you know, these are, stay away from stocks that look like this. You don't know what the hell they're gonna do. It's too choppy. You want stuff with volume. All right, like, you know, this is choppy too, and you see it didn't sell much. It wouldn't have. So if I was looking at something like this, the 1 minute time frame is really may not be that helpful, but you know, this did run above the 9 EMA. All right. Let me look at something a little bit better. Like BPLH. This is a stock that, look what happens. Sometimes when you watch a stock in the open, let's say this stock was on your watch list and you're like fixated on buying it. All right, I'll put the 5 minute here so you can see it. What happens is it consolidates. When you see a stock consolidate sideways, that means usually there's going to be a break either down or up. And what you do is at this point, this is a higher day. So if you're watching this, you want to see, okay, so in the first 5 minutes, right? No, this was the high and this was the low, right? So that is resistance and this is support, right? Okay, and then what you can do is, if you're watching, if it has some volume, if it breaks above this, you buy. If it breaks below this, you short. All right, and that's another way to get a confirmation. And you see how it's much cleaner here on the 5 minute than on the 1 minute. So it's choppy because of the lack of volume. But if you're watching this on the 1 minute, you know, it broke above it. You could have bought it, and it kind of rides the 9 EMA. But you know, it's going up, but you don't get a clear confirmation. Now, if you're looking at the 5 minute chart here, you get a better indicator on the 5 minute chart because it's choppy. It's not a ton of volume. But once it broke above it, you can see, look, the MACD lines on the 5 minute is a lot clearer. Even though it's still bullish on the 1 minute, you see it, but it's much clearer on the 5 minute chart. And here, yeah, if I'm looking at the 5 minute, right here I'm in and I'm just holding it. Look, first bull flag, right? So this is the sideways sort of, you know, consolidation. It had broke. You had that one gap up, pull back. This would have been my entry right here once it broke above this. So if I'm watching the 5 minute, this would have been another entry point for me. Once it broke above that, you see it consolidated. It went up and down, didn't know what to do, but it gapped up. And you know, you didn't get much here, right? It went from 134 to like 144, 10 minutes. But look, then it sells off, then it sold off. So you gotta be careful. You gotta be careful with these stocks. But I'm just trying to show you like little entries. And most of these stocks I wouldn't have watched because they're not liquid enough for me. All right. Let me see if I can see a couple of others here. I'm just looking through these. Let me just, matter of fact, let me see CMP. Let's see that. CMP. I mean, if you caught this at the open, now this was moving pre-market. Let me see if I can do 1 minute. Let's go here. Let's do 2 days, 1 minute. Here we go. So this thing ripped pre-market. When you watch a stock rip pre-market, so this thing went from 3 to 480 pre-market, you absolutely want to put a trend line if you're going to continue to watch the stock. You want to know where the high is, you want to know where support is, or the close to the low is. All right, and you can see sort of like it starts gapping down, and this is sort of where support is at that point. So you can get a sense of what the stock is doing. And when you watch the market open, it kind of you know, dipped. But then look what happens. You see the MAC 2D lines get very bullish on the 1 minute chart. Okay, we look at the 5 minute as well. All right, and on the 5 minute though, look, on the 5 minute, this is still very bearish. All right, even though you got that spike, because this all happens within 5 minutes, 5 to 10 minutes. Now, had you caught this here on the one, and that's why you want to have the 1 minute chart at the open, because stocks are so volatile, they move so quickly that you would have to be very quick. I mean, you had an opportunity here, had you been watching it at the open, to get in. You see that this was, at this point, this was the low. It kind of dipped below it, but it broke above it, and this is the confirmation here. Now, You could have took a chance and went in on this because it kind of, if you notice, this was the pullback. It's hard to tell, but it goes up, and this is sort of like your pullback, and then it kind of rips up again. All right. So this could have, you could have bought right here and watched the gap, but it happened so fast and it sold off. So you had a chance to get in between 413 and 475. It's at a high of 475. This happened all within 5 minutes. So had I watched this, I probably would have, just because this is where the consolidation took place and this is the new candle that's going higher. I might have taken a chance and bought this, and I absolutely would have sold right in this candle, because I would have sold right before 450, because to me 450 is a psychological resistance point, and I see it sort of choppy, and you see it kind of just came back down. All right, and remember, if you're watching this on the pullback, as soon as you see this, as soon as you see the stock go green, you just put that trend line so you can see, and you see it sort of breaks the trend and then comes back down. So even though, look, it was still bullish, super bullish here, it sold off, and that's to tell you that this is where the curl takes place, right here. So here it's still bullish, but if you look at the time frame, it's starting to curl. So that's when hey, get out, or short. Maybe you're watching this to just look to short it, and that's really what I like to do. I would have been watching this really just to get in and short this back down. I prefer me personally, I prefer to watch a stock rip and just wait for the reversal and short into the reversal. I think to me it's safer and simpler. But not everybody likes shorting. It just really depends on what you like to do. All right, let me look at a couple of others here. See if I see anything here. Nah. Let's see anything else. Let me look at some of these other stocks. See if I see anything good to show you guys. You see, I'm doing this in real time, just to show you. Look, this is another stock that sold off. All right, and you're watching that 2 candle gap scanner. All right, and the price direction going down. You gotta be careful, because you're looking for the dip, and you might have been watching this and you say, okay, I see the candles. Oh, I see the reversal. It finds its support here. So you place a bid order, right? You buy the stock, and it goes in 2 minutes. It goes from 716 to 724, but then look, it just consolidates and continues to sell. All right, so you got to be careful. Wait, when it's this close to the moving averages, it's usually a good indicator. It's going to continue to sell off. You want to make sure that when it's this close, you want to make sure that it breaks above it. That's a better confirmation sign. And you see, look, the indicators are still, they're still pretty bearish for the most part. All right, but what you do is you have your stop loss. So you make the low here your stop loss. So you watch it. Let's say it continues to turn downward. You can continue to watch it. You can say, all right, at some point this stock is going to find it, actually, find its real support level. And it had a few fake outs here, one fake out here. All right, but once you see a full confirmation of an actual sell-off, right? And let's say you're really patient, right here, you could have, in that reversal, you could have bought. All right, you didn't get that much though. You got like 10 cents, and then it kind of continued to sell off. But then, towards the end of the day, look, it hit the rope below 7, and then here it went from 7 all the way up to 708. It didn't really move much, but you had a couple of pops. So you see, like, dip buying is not always, it's not always gonna work. All right, sometimes they move big and sometimes they don't. But that's why risk management is important. That's why knowing how to get out, putting your stop losses makes sense. Is another dip buy where you could have watched this here and watched the dip, but look, it found its support here. All right, and then look, and then you had a nice reversal. So it opened, stock opened at 13.99. It found its low at 13.89, so 10 cents, and then look, it had that reversal, and then look at the flag. You see, it goes up, flag, boom, right here. This is your first buy, and then it kind of pulls back. And once it pulls back and it goes like this, it's choppy. You're not really sure what to do at this point. You see, it's like these are wicks that are all indecisive. You're not sure what to do. But it's still bullish. And the MACD indicators were right here in this instance. Even though it's choppy, it's still bullish. And you know what? It actually was correct. And you see, once it came over here, it sold off. But you know, you could have dip bought this and rolled this all the way back up to about 14, 16 from 13.99. You know, it's a more expensive stock, but you know, you could have made some money there. All right, so you know, these are the stocks that you know, I kind of wanted you to get a sense of more of like what entries are. You see here, it's just riding the 9 EMA. These are like, this is like nice and easy. Like here, look, pull back. This is your opportunity. Pull back, right? This is, remember, these are flags, bull flag. Here, boom, bull flag, and then it kind of consolidates like this sort of, you know, sideways, but it's still above the moving average, right? Still above the 20. And then you see this little curve forming, right? U-shaped pattern. That's another buy sign. And it runs again, bull flag, another entry. But you know at some point, right, this is oversold. See the MAC 2D lines, and then you see sort of a, you know, small sell-off. So right here it has that small, I'm sorry, right here it has that nice little sell-off, but then it finds its support, and then it continues to rip up. So you know, what that tells you is, you know, you don't really know at the end of the day what's going to happen with a stock. Look, and then it had another U-shaped rip, and that's why it got some volume, because people saw that U-shape. You know, but look, and then it just sells off again. So, you know, there's no perfect science to any of this. But basically that's what you're looking for when you see a stock rip. You're looking at the patterns, all right, to get a sense of the direction of where the stock is going to go. I was just looking to see if I saw anything, you know, a little bit more typical of what I trade. I don't really see anything else, but you know, IPCI. I'm sorry, the stock that I showed you earlier. I forget which one it was. Zen is very typical. This is the type of stock that I like to trade more than anything else. Okay, you know, stock like this that rips at pre-market, you gotta be careful too. You know, usually it has its run. If it has its run like that pre-market, you know, a lot of times they don't run, they just sell off. Okay, this kind of just consolidated. You know, it sold off, it had a rip, and then sold off, and then consolidated, and sold off. You just gotta be careful with these. All right, so you know, I hope that this sort of makes sense. So remember, you wanna buy, you know, dip buys. You wanna buy breakouts. You know, if you're at the open and you're buying a stock, let me look for another one. You know, remember, you're gonna get pullbacks. So here's a pullback. Right here is your first entry, right? You get that another pullback. You see why you get that volume? Because people see the flag pattern. People at between 9:30 and 10, you know, when you get these run-ups and you get the pullback, this is consolidated. People are taking their profit, and you see that here, you're gonna get the volume push, and you see that break high a day. At this point, people are in right here, 21.16, and it gaps up, and then, you know, it's kind of extended, and then it kind of pulls back, and then you see people, because they pull back and hit the 20 EMA, and you see that high day right here. You're like, all right, if it breaks above this, I'm in. And you see, broke above 21.44, and then it gapped up to 20.60, had that pullback. But usually, what did I say? You usually get two. In this instance, you got a couple more, but generally you're gonna get two pullbacks. Just know that at some point, when a stock is opening from $20 and it's going up to $21, it's gonna pull back at some point. All right, it's gonna have a big pullback. So you don't want to be, you know, you want to be careful where you buy. You know, and it had the rip up, and it had another bull flag. So this is another entry. But look, it had that big sell off all the way to 21.50, and look what happened. It touched 21.49, and it gapped up, because that 21.50 is that psychological resistance point. And if you see a stock consolidating and it's holding a new support level, then you're gonna say, okay, you know, if you're watching this, you're gonna say, if it breaks higher day, which is here, okay, you know, this is my entry. All right, you know, and you can see right there, look what happens. It broke higher day, and it gapped up to 21.96, and then it had this U-shaped pattern where it kind of sold off, but the U-shaped pattern is a very bullish sign. And right here, this is higher day. So, you know, if you're watching this, there's another opportunity to buy. And you could have bought here 21.97. It went all the way to 22.22, but then it had a massive pullback. All right, you see the MACD roll up. Its RSI is hot, and look at this. Big sellback. Right to VWAP. Yeah, VWAP played support, and then we just kind of just consolidated. So, you know, I'll do some better videos on like, you know, entry points. Watch Warrior Trading has some good videos on, like, you know, how to trade momentum. You know, But generally, that's what momentum traders do. They're looking for those, bull flags, and they're buying new, higher day. They're looking at 5 minute candles to form new highs, or it depends on the volatility between the 1 minute and 5 minute chart, or where you wanna enter. Okay, usually at the market open, you're definitely looking at the 1 minute chart. All right, the 1 and 5. All right, maybe in the midday, if the market's a little slower, you may be looking at the 3 minute and the 5 minute. All right, you're not even looking at the 1 minute anymore. You may be looking at the 3 and 5. So, that's pretty much what I wanted to talk about today about entry points. I hope it makes sense. It's not an exact science. It takes practice. Watch lots of videos. We have some on the website on Bullish Bears on YouTube. I'm sorry. And watch Warrior Trading. I think he has like the best video on momentum trading for entry points. I think way better than Sykes and everyone else, to be quite honest with you. All right. So with that said, I hope you find this useful. Hit me up for any questions, and catch you soon.